President Trump expecting to see his long-awaited reconciliation bill on his desk by this Friday. Joining us right now is Joe Lavorgna. He is counselor to Treasury Secretary Scott Bessent. Good morning to you.
Good morning, Andrew.
We are getting closer. We have what do they call it, a vote-a-rama taking place today. What do you think has to happen we've had a couple of different people even on the show this morning who said there's still some other reconciliation issues that really have to take place before we get to the promised land, if you will.
The bill is moving through really at record pace. If you think about what happened back in 2017, it was December. So this is happening in half the time. To Senator Thune and Speaker Johnson's credit, they've moved this thing along. They're following President Trump's leadership. My boss, Secretary Bessent, is working tirelessly, meeting with everyone. She was a point person, obviously, with the Big Six. It's moving along great, Andrew. So,
what did you make of the comments over the weekend? We've talked about him, too, on the broadcast today, by Elon Musk, who called this bill utterly insane and really went after it more because of solar and wind and some of those things. And obviously, President Trump's made some comments about that as well.
If we don't pass the bill, we're going to have the largest tax hike in U.S. history, and the economy is going to roll over. Because what we have in the bill are very pro-growth initiatives. We're doubling the small business expensing. We're increasing opportunity zones. We're making the President Trump tax cuts permanent. Also, another big thing is factories now get 100% expensing. That's going to be hugely additive to the economy and building. So do you not want to have that? Do you want to have a big tax hike, a record tax hike, and kill the economy next year? That doesn't make any sense.
But what do you say to Elon, for example, on the solar stuff specifically?
Well, I think a lot of that is clearly has been wasteful. It's not very economically efficient and wouldn't exist without a government subsidy. So
It's just his solar interests that have.
Well, I'm not sure. I can't speak for him, but I could tell you that I think that it's an excellent bill. Look at the markets. And I was telling people before I was lucky to join that the economy was very healthy. That really what mattered with uncertainty was getting this one big, beautiful bill through. As the Secretary has highlighted, it's phenomenal. We've had the largest recovery after a 15% correction in the S&P on record. So that's telling you the market is excited about what the
By the way,
business...
they seem to be, even what we thought of as the bond vigilantes coming out in force. They're not today. It's actually the opposite.
And the other thing, what I would tell Mr. Musk is if you look at this one big, beautiful bill, the tax relief to families is huge. It's $600 billion in tax cuts. The CEA is estimating the average family could receive upwards of $10,000 plus, almost $11,000 in tax benefits per annum.
So CBO says this is a $3.3 trillion problem, effectively, right? You say it's what?
So CEA, my colleagues have estimated it's going to cut the deficit by $2 trillion. Here's what I could tell you, Andrew, and this is
But that's a massive delta between these two.
This is right. This is my big issue with the CBO, is they're assuming only 1.8% GDP growth over the next 10 years. That, to me, is historically low and pessimistic. It doesn't account for the fact that productivity growth is accelerating. It doesn't account for the fact that under President Trump's first term, the economy grew nearly 3%. It doesn't account for the fact that you know technology well. What about this AI boom? You're telling me you're going to grow under 2%, that productivity is going to be in the low ones? And therefore, if CBOs, forget current policy, baseline, forget all these laws, just look at their numbers. They're unbelievably pessimistic. I don't understand why. And if their growth numbers are low...
What was your growth number, just so we know?
So CEA has modeled 2.8%, but it's not fully dynamic.
That's a full percentage point higher.
That's what we averaged under the first Trump administration.
It's not far off from it. I think part of the question is whether you count the extension and the permanence of those 2017 tax cuts. I mean, that's part of what they were fighting about.
This is right, but the thing is,
$4.5 trillion. But if you don't count the extension of the existing tax
Becky,
cuts, then it's 700.
Right, but here's the problem with that. That assumes the 1.8% growth.
Right.
So you're going to get a couple of trillion minimum more in revenue just on the growth. And let's not forget the tariffs. We could have upwards of $300 billion in tariff revenues this year. That's like the icing on the cake.
In tariff, do you still stand by the growth questions?
Oh, yes.
There are questions about inflation with the tariffs. I think probably the bigger questions are about questions of growth.
Yeah, no, because right now, as we noticed in the first Trump administration, most of the tariffs were absorbed by foreign producers. That's exactly what's happened. Because not only have the tariffs not shown up, the numbers have actually been better than expected. What this bill will do is, as it was under the first Trump administration, we saw rising living standards through what we call a blue-collar boom. I mean, real wages have risen at the fastest pace in the first 5 months of President Trump's administration relative to every other first-term administration going back to the 60s. So this bill is going to give us faster growth, and we're going to grow out of it, as Secretary Bessent said. You can't cut yourself to prosperity. You've got to cuts. And by the way, the one big beautiful bill is going to have a record amount of discretionary spending cuts. It's all about growth. And this is my issue with the CBO, is if you don't have the right growth assumption, you can't get the right revenue number.
But okay, let me just layer in one other component part to this, which is the tariff debate and where you think the trade deals ultimately land, because that's going to have an impact, I imagine, on what you think your 2.8% growth rate looks like. A lot of CEOs, we were talking about this just in the last hour with former Ambassador Burns, I don't know where you think the situation with China nets out. I think most CEOs are saying to themselves, is this a 30% tariff situation? Is it a 20% tariff situation? And the delta is so big that that would have an impact on just about everything we're talking about.
Yeah, I want to push back against that. When I was in my prior role in the private sector, I had modeled a 10% tariff on everybody but China, and the two reciprocals are 10% and 60% on China. That's what 60%. Well, that's what President Trump ran on.
Right.
And I'd found that a very static, incorrect analysis had a very marginal increase in the price level, not accounting for either foreign exchange adjustments or the fact that producers would absorb it in their margin. So I'm going to push back that that's really not going to be a factor.
So you think whatever happens with trade is
President Trump is going to negotiate hard. He'll work whatever's in the best interests of the American business and consumers. And I'm optimistic we'll get something ultimately done.
How quickly do you think that happens? Because now there's a sense that maybe we finally are closer. We still haven't gotten any major deals yet. The president spoke just over the weekend about the prospect of something around TikTok. That's always been considered a bit of a chess piece in the larger dynamic with China.
Well, Secretary Bessent mentioned with Morgan last week that we're very close on a group of countries, 10 to 12, as Secretary Lutnick mentioned, about getting a deal on or around July 9th, and then basically a backlog of 20 who, as long as they negotiate in good faith, they'll get that reciprocal rate. So we're making progress. The president, I think, has done a great job negotiating, and he's got a great team. And I just don't see, Andrew, again, the equity markets are telling us, with the passage of this bill that's going to come very soon, the markets are telling us a message of growth and optimism.
We also had Tom Lee sitting in your seat just a moment ago, and we were talking about treasuries and the fact that actually the bond vigilantes are not saying, oh, my goodness, and maybe they're more in your camp in this regard. But he made a very interesting argument that he thinks that one of the folks who are going to be buying treasuries are the folks behind stable coins, and that's something we haven't really thought about in the quote-unquote marketplace of folks who buy treasuries.
Let me just say, just to backtrack for a second, the Treasury International Capital Reporting Data has shown record demand for U.S. assets. And the BIS wrote a really interesting piece recently that said any of the selling that had come out of Asia was just hedging. It was not due to any waning of U.S. demand, which remains incredibly deep and robust. So the stablecoin is a separate issue, which could, as the Secretary's mentioned, increase demand without question as that market grows. So we'll see. But, I mean, again, coming back to where we were in April with the tariffs, everybody had this, not just Trump derangement syndrome, but tariff derangement syndrome. And I think even now, even with your discussion with the CEOs, I think people are probably not fully taking a holistic approach in terms of what the bill will bring for growth and how the president's been negotiating.
Well, that's the other question, sort of, does this, once something is in place and there's some semblance of certainty, are we off to the races in some way that we don't fully appreciate? But then the flip side being, had there hadn't been that uncertainty that's been hung over this whole situation, would we be in a different place today, too?
No, because, again, the uncertainty was just a couple of weeks. April 2nd to April 9th, and then the market bottomed to when? April 11th? I mean, this wasn't a long time. It's sort of like, again, I felt like, we went through this routine, the world is ending again. Right. It only ends once. So I think there was too much panic.
And that was on the equity markets. But I think if you talk to most CEOs, there is a little bit of we're watching and waiting and seeing what's playing out. With the exception of the guys who continue to invest heavily in data centers and AI and the like, I think anybody else who's sort of in an industry where you just don't know which way things are going as it relates to tariffs, you sort of say, I'm going to watch, I'm going to wait, I'm going to see what happens, and then I'll have to make a decision.
Yeah, but that's a little bit of a CYB, cover your butt, right?
I'm not saying that.
Yeah, I'm saying, but you have to model to the, people are always modeling to the worst case scenario, and I think we saw a lot of that in April, and now you're seeing expectations shift, given the fact that this bill, I mean, my boss has done a yeoman's job of helping push this through, and a credit to President Trump for giving him a key part in that. And then the bill gets done, and yes, we are off to the races. I don't know what, I mean, again, I think this on the small business expensing, the permanency of the tax cuts, Andrew, strong growth. I mean, this is all good stuff. Wherever your politics.